Good morning, everyone, and welcome to Morning Market Movers, where we do live analysis for day trading and take a look at hotspots in the markets for today, Wednesday, June 15th. It is Fed Day. Fed Day. Ding, 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 ding. My name is Todd Rich. I'm with Nadex. With me, Brian Caprice from Keep Trading Simple, and we are going to jump into it quickly today. Uh, we just had retail sale numbers come out. I'm going to show those to you in a second. But most importantly, everyone's eyes are focused towards what is the Fed going to do today. And I know the markets were predicting or looking for potentially seeing a 0.75 interest rate hike. Some people were even calling for a full point. Based off of, coming off the heels of the CPI number. PPI numbers weren't even all that great either. But with core retail sales, I do not see them, and I do not think, but we will talk about it, that we're going to see that. They broadcast they were going to do half an interest rate percentage, 50 basis points. It looks like that's probably what they're going to do. So we'll get into that in a second. And we're looking at equities, looking to open in the green, and got the metals just took off because we're not going to see that steep incline in interest rates that people like as a surprise. We don't think. We'll see what happens later this afternoon, 2 o'clock, the Fed actually comes out. But before we jump into it, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. And just quick hits, because Brian's going to go through this, but just so you can see the numbers, we had core retail sales. They revised down from the last number. They were expected to come in at 0.7, came in at 0.5. So they came in lower than expected. Retail sale numbers themselves, they also revised down. They were expecting them to be 0.1. They actually came in negative. So retail sales came in negative. We're seeing people buying less. Core retail sales came in under expectations. Okay, yeah, the people are starting to buy less. And that in and of itself will probably preclude the 0.75, although maybe they'll surprise us. We don't know. All right. And again, with that, I mentioned quickly, and I just want you to see it. I mean, silver and gold obviously took off. We're seeing silver that climbed all night and then took off again. Same thing in gold. Brian's going to go through the charts. Brian, I'm going to swing it over to you. Let's
Sure.
look at some of those. Any other headline things, but metals and equities is
Mm.
really what we're looking at today. And then everyone's waiting to see what the Fed has to say.
Yeah. So, I mean, as far as overnight headlines, pretty much, I mean, there was a little bit of headline. There was a statement after an ad hoc meeting with the ECB Governing Council. Again, the ECB is supposed to be raising in July, so that was kind of big news. But everything else has been solely focused on um, profit margins. Oil companies are making too much money. I love that. They make too much
Well,
money.
they are making too much money.
Yeah. Yeah. Well, um, what else was I gonna say? So, I mean, there was some ECB headlines, but everybody's focused, and even one of the other headlines says China puts monetary easing on hold with Fed set to hike rates. So again, other countries are looking to see what the United States is going to do because it does affect things. We are still the global reserve currency, and it will affect things whenever we raise. All eyes are on that. Now, it was interesting that Wells Fargo had something that came out 4 minutes ago, even though retail sales came out 8 minutes ago. I don't know if this is just a lag in their news or whatever it is, that basically said brace for a hawkish FOMC meeting. That was 4 minutes after the retail sales came out. And as Todd mentioned, the retail sales numbers as big of a miss and as big of a blockbuster kind of release the CPI was on Friday, this retail sales could be said to be the exact same thing. There was expectations it was going to be lower, but not only was it drastically lower, they actually made a negative revision last time, meaning it wasn't necessarily as high. So is kind of this is that double double that we talk about a lot of times. So this is horrible. The one thing the Fed was saying is like, yes, the market can justify things. We're not trying to send people in a recession. Right now, we're still spending money. People are still buying things, right? Not anymore. So we know that inflation is not slowing down, it's accelerating. We know now that people are not spending money, they're actually spending less, not even just reducing how much we spend. It wasn't even a positive number, it was actually a negative number in retail sales on a month over month basis. So I said yesterday, I was expecting probably more than 0.75. That's kind of what we wanted. I didn't think there was a chance of one. If we got it, I think the market, the inflation justifies it. But I was kind of yesterday feeling that Powell's going to go in with zero point 0.5. And he was just going to say, yeah, we're going to stick target. I would not have been surprised. Now I feel that it's almost guaranteed that there's a nothing but a zero point 0.5, which I think is overall green for the indices today. I think yesterday everybody factored in 0.75. Again, nobody had been able to see the retail sales numbers. I mean, obviously, insider people kind of knew them. Everybody was talking 0.75, 0.75, 0.75, and that's where the market moved. I mean, we saw, kind of adjustments. The bottom came in, things rallied back a little bit. Technically, right now, everything is in the green right now. I mean, we're up 1.5, 1.1, 1.6, and everybody's like, well, why? We're raising interest rates because the market had already factored in 0.75. Even some of like the different trades that we talked about yesterday, they all started to move early. It was like the market closed yesterday, and magically they all moved exactly in line with what we talked about with 0.5 today. So again, to say that they didn't know is kind of crazy. Now the VIX is still maintaining high, and again, I'm a little bit delayed on VIX, so this may start coming down, but we don't really know. And this one should be kind of stabilized, but again, it's weird. It is a negative number. You see negative numbers, you're like, oh my God, this is bad. This jacks the fear up. But right now, the fear is not of retail sales spending, it's of the interest rates going too high too fast. That's really kind of where the fear comes from. So you may say, well, wait a second, this is still really high. Fear's got to be up there. I mean, that was a horrible number. Why are the indices not tanking right now? Well, the reason they're not tanking is one, they found bottoms, and again, a lot of the pieces we talked about yesterday morning, they all came down and hit our levels. We were looking for a break below 37.15. It broke it right up like 4 o'clock, 5 o'clock. So again, not really necessarily a trade for us. And that was the bottom. We knew it was an area of buyers, but we're waiting for those buyers to be exhausted. That's where it rolled. Okay, so ES is up 1% already. You're not seeing any type of reaction whatsoever. You're actually seeing more of a green candle. It's not changing trajectory, even though retail sales was just horrible, right? There are some levels up here, and I think the 38.12 will be an area we want to watch for. And again, I would say look for this as more of a trap area. The 23.6 is there. And again, this is kind of one of the, kind of last like a pivot, not, I don't want to say pivot because it's not truly a pivot, but it is an area where you're going to see resistance coming in. So people will be looking at that as an area. NQ, I don't want to say NQ is taking off. It is the strongest right now. It is up 133, and we mentioned
the one
yesterday
that's gotten
target
beat the hardest. So
yeah, it was getting hit the most, and we talked about a target of 11,265. It came down to 11,237, so just past it. It didn't actually get all the way down to our buying area, but our target is actually an area that it's kind of a more exhausted area, so we don't necessarily use our targets first. We're looking for confirmations. And it did hit it once, and then it kind of hit around, and now it's rallying higher. I would say there's a selling zone up at 11,573. So could we rally up before the open and then have it drop down just to take off again? We could, because I mean, if this was any other given year, retail sales numbers this bad, this would send the indices down. It's like, holy crap, this is bad. But people aren't worried about the amount that people are selling or the profits. They're worried about the interest rate going too high. So that's an interesting figure. The Fed's probably extremely happy because if people are not spending money, that's starting to do that demand destruction already. Because if you're not buying stuff, people are not selling stuff, which means again they start pulling back
the price
naturally
of
anyways.
right, and
Yeah, so that's
it
probably
does.
exciting.
We've heard this again. I mean, we mentioned it yesterday. Target, already
Mhm.
slashing prices. I know I benefited from it. I mean, but they're just dumping things. I
Yeah,
mean, if
everything
you're
because they
looking,
got to get rid of inventory. Their inventory is full.
yeah,
Remember having a full inventory, you would think we're like that's good. You can, no, for them to make money, they have to sell their inventory, not hold their inventory. And if the inventory is full, think about that too. If you're a manufacturer for Target and Target's inventory is full,
they got
they're
no
not
room to.
going to build anything. So it's like it's trickle down, but backwards. So they have to move it because same thing. If if Target's not buying from you and you're like, wait a second, I need to produce things. I need to find somebody else to buy my stuff. Then Target down the road may not be able to get things. So it's a big supply chain thing there. So Target has to move it. YM also popping back up again, still within kind of more of its range, but obviously, with that number, there's really no big piece there. And even Russell, I mean, Russell's the little guys. Russell found a bottom yesterday. We said, hey, listen, look for a base and look for a confirmation. It could roll off of it, and it did. It came down and hit it, and again, it got. I mean, there's a lot of congestion in here. Started to move back up again, and we're technically at 1% right now. I mean, retail sales just came in at a negative number. People are spending less money. The official recession is not even here yet. We haven't even raised it, and look what it's doing. So again, it goes back to did anybody know the number? Magically, the bottom was at 3 o'clock, 4 o'clock yesterday, and then it just did nothing but rally up in the overnight. Now, could this be the big, push? Could it be the market positioning for a big drop? Yes. Um, I will say right now, I think the market has shifted. I think everybody at this point believes it's a point 0.5. I'm going to put the other scenario out there. If it does come in at a 0.75 right now, I think there will be an absolutely massive drop in the market because retail sales and a 0.75, I think that spells doom. It's automatic
Right. A
recession
little too
immediately.
much cold water. Yeah.
Yeah. So that's why I think the market's like, you know what, 0.5 is good. We're not raising as much as we thought. We'd already priced in 0.75. But if they do the 0.75, even though it was priced in, then it's like, holy crap, the resale sales was absolutely, buyers are not spending anymore. That was
Right.
the one thing holding us up. And then we got the 0.75. That's like a double whammy on top of it. So, yeah, I think that's crazy. We've gotten a little bit of relief too, but, you can look over in gold and silver, and gold's up 1.3, silver's up 2.5. They are pulling back a little bit right now. But you can see, with a massive number like that, look at that. Really here's the European session, but right here is where the U.S. market closed. Interesting that the U.S. market just happened to close at the low, and then all night, every other market rose, 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 rose. It's kind of like somebody knew what the data was. Now, we are up at 1830. We mentioned that was an area where there were sellers in the past. They were confirmed one time, and that's where we're kind of chopping through right now. But had gold factored in 0.75, you can see that the big decline really kind of started from last week. Why was it this high? The CPI number. Right? Then we didn't know what to do with the PPI number, and it's kind of like, all right. And now it's starting to go back up again. Why? Why would you want to get into gold right now? Well, 0.5 is one of those things that it may not halt inflation. Remember, the reasons why they're saying inflation is high has nothing to do with the United States. It's everything that's happening overseas.
Yep.
That's not changing. So if we're only doing 0.5, that doesn't stop the factors that are causing the inflation overseas, which means it's a pro-inflation environment again. So again, this is that stagflation thing that we start talking about where people are
Right.
not spending, but inflation is continuing to rise. Us raising the interest rate doesn't fix what they're saying what the problems are. So yeah, and then silver, same thing. Silver's, been taking off. There's some profit taking coming from that news, which as there should be. It is also up at the 61.8, and there are obviously sellers after a big drop there. Question is now, I would expect there's probably a little bit of a drop at the open as every retail trader out there is like, oh my God, sell, it's huge. I got to say, we're sitting right in the middle, 2150. I think the chances to actually hit 22 are probably closer to than hitting us, hitting 21 today. We are sitting right in the middle, right around that 50% mark. But gold's kind of the same thing. It's not quite up as high as silver, but I think a 0.5 sends these higher. I think that, again, I think it's great for that. And again,
the market's priced in much worse. So
yeah. And the dollar is going up a little bit from it. It's been going up since 7, but in the overnight, it did nothing but drive right back down again. And then when you see pre-market news kind of move up, again, that tends to signal that it's going to be more of a weak play today. So, technically 0.5 still is a stronger dollar play. It's just how much is the market factored in, how much has it not. So,
right.
I would say right now the biggest currency pair moving since yesterday's close was the Aussie dollar. Gold is moving massively right now. If they do hit us with the 0.75, and it is a surprise, that will bring in gold weakness and dollar strength, which leads us more to a short. We were talking about a bounce coming off of that level. It did come early again at the end of the U.S. trading session. Again, bounced off the old level, came back up again. This one is more prepared for a short. So if you still do believe that the 0.75 is coming, I think Aussie dollar is the way to do it. But something like the euro, here's the pushback down again, but is this justified? Is that really is the data today really? Horrible dollar news. Does that really bring dollar strength in? No, it's a red number. It's actually bad for the dollar because there's no reason to raise an interest rate for it. So seeing them drop this right back down again, they're like, I don't know what to do with this. The euro's at 0.03.
The markets really don't know how to digest this, and the truth is everyone's still going to wait and see what is the Fed actually going to do, and then how are they going to position it for going forward, because there will be comments as well.
Yeah, and there will be, and there'll be a lot of questions about that, like what happened to retail sales. But again, seeing the euro drop down on that news, this is dollar strength coming in off of horrible dollar-based news. To me, that also looks like they're starting their pre-position, and we may have the opportunity for a long when the price comes in. Because again, 0.5, I think the market's going to take the point. Literally 2 days ago, they were saying the market is daring Powell to go to 1%, and now 1%, we're like, right. Holy crap, we're probably getting 0.5. That's half. JP Morgan,
it's a
Goldman the other day did it. It's hard.
So. Yeah, it's a very difficult job that they got to do. So,
Yep. And bonds, look at bonds gapping higher. Bonds gapped higher off of that news.
well,
So
finally, catch a bid somewhere.
yeah, got to do it. So, but yeah, so it's going to be very interesting. Be very, very cautious of your positions today. There will still be an opening, kind of, to 10:30. There will be something that you guys can trade early, but then after that initial rush, after the 10:30 reversal, look for positioning for, what that 2 p.m. Window is. We do have oil inventory, by the way. It basically came in flat. I'll slide it across real quick. Remember, that is at 10:30 today. There was expected to be a little bit of a down draw. Again, a little bit of a surplus, not really a monstrous number where the other, this is not the official number, the EIA at 10:30 is today, but we still have that on top of it. So, I would say look for some opening movement, a quick whip responding to this data. Look for a 10:30 reversal as the market positions itself. It'll go really, really slow from 12 till 2. At 2
And
o'clock,
then the
it'll be off
number.
to the races. Yep. Then
And
it'll
then the
be
shoe
then it'll be
drop.
craziness. And like I said, I think at this point, I think 0.75 sends us straight down. I don't think it's factored in anymore. I think 0.5 sends us up. So I do think there will be some movement today. And this press conference at 2:30, grab your popcorn and your soda, because
Get
there's going to be
ready.
some questions. So
Yeah.
I wouldn't want to be pal today. Is all I'm going to say.
Yeah. Going to make
And
for an
that's it for today.
interesting afternoon.
Yep.
All right.
Yeah.
Listen, with that, any questions for Nadex, please email us, customer service at nadex.com. Any questions for Brian, you can send them to support at keeptradingsimple.com. I'm also available via email, todd.rich@nadex.com. And ultimately, what are we seeing? Just the quick recap. Retail sales came in way worse than expected. People are not spending. Couple that with some of the other corporate earnings reports that we've heard. It sort of contradicts some of the numbers we've seen with CPI and PPI. What's the Fed going to do? It's Fed day. Expect some volatility this morning, and then today, 2 p.m. Eastern, get ready for it. The shoe's going to drop. What are we going to see? This is what everyone's going to be talking about today. Our prediction is they'll probably stick with the 0.5, and you could see some support in the equities with that, in as much as we thought, or it was looking as though 0.75 was getting priced into the markets, which is why we had such a significant washout recently. If it comes in at 0.75, it might be a little bit too much coupled with the retail sales. So volatility today, definitely a great day to trade the markets. Brian and I will be back again tomorrow morning. And until then, good luck in the markets. Thank you so much for joining us.